Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Tuesday, April 15th, 2025. This is Nelson John. Let's get started. The US-China trade war just got a whole lot heavier, literally. In a bold move to President Trump's sweeping tariffs, China has halted exports of rare earth minerals and magnets, materials that are crucial to everything from fighter jets, iPhones, EVs, and semiconductors. These are the building blocks of modern technology, and without them, America's supply chains are at serious risk. China supplies nearly 90% of the world's rare earths and dominates the complex refining process. Now, exports to all countries are being hit with tighter permit requirements, creating delays that could stretch for weeks. The export curbs cover 7 critical rare earth elements like dysprosium, terbium, and gadolinium, which are used in magnets, radar systems, jet engine coatings, and wind turbines. Affected U.S. giants include Tesla, Lockheed Martin, Honeywell, and Apple. With only one rare earth mine on U.S. soil, America is feeling the heat. Experts say the move could accelerate efforts in the West to reduce dependence on Chinese minerals. But that won't happen overnight. In this high-stakes chess match, China is making it clear: if Washington plays tariffs, Beijing plays rare earths, and the global tech race may soon be collateral. Indian gold buyers are hitting pause, even in the wedding season. After the price of the yellow metal soared over 6% last week and a staggering 30% year-on-year, demand has slumped by as much as 50%, according to industry estimates. Consumers are in wait-and-watch mode. They're expecting prices to ease before Akshaya Tritiya on April 30th, says Renisha Chenani of Ogmont. At 93,375 rupees per gram on MCX, gold futures are now trading at a discount to bank rates, indicating weaker consumer appetite. Saurabh Gadgil of P. & Gadgil Jewelers notes a 15 to 20% drop in quantities sold, though higher prices are cushioning the hit in value terms. Why the surge? A cocktail of global uncertainty. The US imposed and then paused tariffs, sparking fears of a trade war, recession, and even questions over the dollar as a safe haven status. Bonds yield spiked. The dollar slid 3%, and investors turned to gold, pushing prices up. As Surendra Mehta of IBJA puts it, the industry is seeing a demand dip of nearly 40 to 50% this month. But with Akshaya Tritiya around the corner, jewelers are hoping the sparkle returns. For patients waiting for hours, sometimes days, for insurance approvals, relief could be on the horizon. The centre plans to mandate cashless claim approvals within an hour and final settlements in 3 hours. It's part of a larger push to bring BIS-like standards to the health insurance industry. The goal here is to ensure insured patients don't suffer financially, said an official, as India aims for universal health insurance by 2047. With medical inflation rising 14% annually and premiums nearly doubling in recent years, timely payouts have become critical. Yet delays remain rampant. India had 25 million unsettled claims as of March 2024, up from 8.5 million in 2022. Insiders back the move but flag real-world hurdles, like rising hospital bills, inconsistent documentation, and coordination gaps between insurers, TPAs, and hospitals. Patients care about fast approvals. Hospitals, they care about settlements. Fixing both needs seamless collaboration, said R. Balasundaram of IBAI. Also on the table are standardized, simpler claim forms, stronger enforcement, and a new regulator focused solely on health insurance. If it all comes together, says ISB's Shashwat Alok, it could boost trust, expand coverage, and bring India's insurance penetration out of the ICU. After decades of flying under the radar, Tata Capital is finally stepping into the spotlight. In a confidential filing with SEBI, the $365 billion Tata Group has kicked off plans to list its financial services arm, marking only the third Tata IPO in 25 years, after TCS and Tata Technologies. Estimated to raise 15 to 18,000 crore rupees, this IPO isn't just big, it's a long time coming. The Reserve Bank of India had mandated systemically important NBFCs like Tata Capital to go public by September 2025. But for the Tatas, finance has deep roots. They once ran the now nationalized Central Bank of India and launched New India Assurance in 1990. Tata Capital's early years were rocky, hit by bad infrastructure loans and internal group crisis. But under Chairman N. Chandrasekaran and CEO Rajiv Sabharwal, the company pivoted to retail lending, grew a 1.5 trillion rupee loan book, and shifted focus to affordable housing and SMEs. Now, as Tata Capital prepares for its IPO debut, expectations are high. They'll bring governance and trust, but will they stand out in a hyper-competitive sector, asks Ajay Garg of Equirus Capital. From legacy to leap, Tata Capital's IPO could redefine India's NBFC space. A Jaipur resort has accused OYO of inflating its revenues, landing in a massive 2.66 crore GST notice. The resort, Samskara, had filed an FIR against the Ritesh Agrawal-led travel aggregator, alleging forgery, cheating and criminal conspiracy. According to the complaint by Madan Jain, Samskara had a 12-month agreement with OYO starting April 2019. But shockingly, OYO reportedly declared fake bookings for years prior to the agreement, showing inflated business worth 22.22 crore rupees, while Jain claims actual transactions were just 10.95 lakhs. The GST department acted on these inflated figures, issuing the resort a show-cause notice along with penalties. Jain says the GST for genuine bookings were already paid via OYO. The FIR filed at Ashoknagar police station names not just OYO but also its founder and group CEO, Ritesh Agrawal. Industry voices are now speaking out. Hussain Khan, president of Hotel Federation of Rajasthan, expressed that nearly 20 hotels have faced similar notices. "We had stopped accepting OYO bookings years ago," he said, citing the platform's poor record. OYO is yet to respond publicly to the charges. The story is still unfolding. That's all for today. Thank you for joining in. We are eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a tremendous Tuesday.